What is home equity?
I don't know. Tell me, Staci, what is home equity?
Okay, so today we are going to talk about home equity. What is home equity in your home?
Oftentimes you build wealth and you don't even realize it. Consider this. Consider you own a home. You've owned it for, I don't know, maybe 5-10 years. And the home is worth $300,000. If you only owe, say, $200,000 on it, then what we're talking about in terms of home equity is the $100,000 difference. That's money that you can use. You can borrow against your home and take that money and possibly buy another home or build a business or do any number of things. Pay for your kids' college if you have kids, if you are not in the game of paying for someone's college, you could do whatever you want with it. But one thing, and I want to add this real quick before we go any further, is be careful, because remember, what you're doing is you're just creating additional debt for yourself. Make sure that you're good where you are. You can make the additional, your payment on your house payment's going to go up if you take an additional line of equity. Staci's going to talk more about that. But still, that equity is yours to use, and it's important to know that you have it and you have access to it.
So a lot of times, back in the day when I was at a large bank, I would have people show up and say, I want the equity out of my home. Well, you can't just have that equity out of the home unless you sell your home.
Well, yeah, I was going to say, I mean...
So yes, you can,
the only way you can do that is to actually sell the home.
Yes.
And then whatever you receive on the sale of your home is you taking the equity that is yours. But
yeah, so kind of what we're trying to get across is a lot of people don't understand that, it's just like, kind of like stocks. That's not none of it's yours until you sell it, right? But you have access to those funds in many different ways. You can actually do a home equity loan. You can do to do all your renovations, stuff like that. Mm-hmm. As you said, college.
Right, there's a lot of things. You just understand is that money could be there and you may not realize it. It's important to speak with your financial advisor or your loan officer, both, frankly, and talk about what kind of equity you have and what might be the best thing for you to do to take advantage of it. But what you're really doing, and I guess to make it as easy to understand as possible, is you're taking an additional note or additional loan out on the home to utilize that equity that is in the home. Again, unless you sell the home. Mm-hmm. If you sell the home, you realize all of that equity. But assuming you want to stay in the home, this is how you would take advantage of that and leverage that money to do other things with it.
True story, but I'm going to go back on what he just said. I would highly recommend, if you're just curious, you can call a real estate agent, DM Mike, if you choose to, have what's called a market analysis. Is that what it's called?
Right. So depending on where you are, they have different names for it. The CMA is common, competitive market analysis, but basically broker opinion. Mm-hmm. I think broker opinion is probably a more accurate way to put it. And what we would do is we would take a look at what has closed in your area to try to get an idea of what the bank is going to see and how much equity the bank believes you have available in your home. Because of course, once you start down this path, the bank is going to take a look at your house and they're going to give you an opinion of how much equity you have left. They're not going to allow you to borrow, well, I'm not going to say not, rarely, under
100%.
Very strange circumstances would they allow you to borrow 100% of the equity. But they usually want you to have 20% left in the home or whatever. So let's say in our example, we have a $300,000 house, you owe 200, there's 100 left. You could probably, as long as you keep, say, 60 grand in there, you could probably borrow 40. And 60 grand, I say that because that's 20% of the value of the home, assuming our numbers are right. Remember, there's some math involved. All we really want to alert you to is that there's equity that you can take advantage of and hopefully do positive things with that make you even more money or bring you more happiness or make you smarter.
True story. So what we are going to do now is we're just going to go over different ways for that. Meaning, renovation loans. You could actually do a renovation on your home, which could actually increase the value, which would then increase the equity in your home.
So I'm a big fan of renovation loans. Loans used for improvements really is kind of what we're talking about. What we're really talking about here is not a renovation loan, but actually a line of credit or a loan that allows you to improve the property you're in. Which hopefully in my world you would realize when you go to sell your home at a future date. So you're building equity, additional equity, using the equity in your home
To make more equity.
to make more equity down the line. I mean, that's how you do it. That's really what leverage is all about. It's about using what you currently have to hopefully make even more money down the road.
Another way to get equity in your home is to make extra payments, possibly go on a shorter term. Then you're going to have that larger gap in what you owe because you're paying your home off quicker than you would, say, on a 30-year mortgage.
Yeah, I mean, that really is more of a loan officer / financial advisor question. I don't have a lot to offer on that, nor would I. It's really going to depend on smarter people than me to make sure that they offer you the advice and the guidance down that road.
Well, and kind of what I'm getting at is, again, equity. How do you continue to build equity? You could have somebody rent a room from you. That would give you money.
Okay, let's be really specific. Building equity starts with paying your bills.
True.
So it all starts with paying your bills. You have set up a history where you've been paying your bills. Again, my original example was 5 to 10 years. You have a history of paying your bills on time, and that is how you build equity. There's other ways you could to subsidize your payments. Right. I mean, you can always have a roommate who pays you and do other things like that. But that's not really, I want to try to keep this as simple as I can and simply say.
I like it to be as confusing as possible.
True. But I really want to make sure that you guys understand that you might be sitting on some money that you could use for other things, not horses or cars or
Would you use it to buy another property? Would you use the equity in a home to buy another property?
Again, I think it's a solid option for you to consider buying additional income properties or additional properties that might appreciate over time, to again do things that are going to make you wealthier, smarter, or happier down the road long term.
True.
Good.
Good.
All right, guys. Thanks again. Cheers.